Welcome to Accounting High. Most businesses don't need that.
I feel great. I'm in the best health and shape and mentally, physically that I've ever felt. Maybe not ever, but I feel great. And that's because I saw a nutritionist. So the doctor is the healthcare industry, and they have tried to cure my problem with drugs rather than clean, healthy living, fixing the foundational problems, fixing the foods that I'm eating and the way that I'm sleeping and all of those foundational core things. So I think this translates very well to a business and being served the cash flow forecast. Most businesses don't need it. So if you're in, and this is where we're trying to catch people before they get into that stage. If you just get the sniff or the whiff of cash flow problems, come find us. We're the cash flow doctors. I bet you somebody else already calls themselves that.
That's a good one.
We're the cash flow nutritionists. That's what we are. We're the nutritionists. We're going to help you fix the core problems.
Check out the Cashflow Show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow Show. The Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
What's up, Nix?
Hey, Scott.
That intro is like a Steph Curry 3. It's just like a swish. It just feels good to listen to. How you doing?
I'm pretty good.
What we can talk about today on the Cash Flow Show?
Today, we are talking about something controversial. Today, we're talking about, do you really need a cash flow forecast?
Do you really need a cash flow forecast? So, students, listeners, I know that there's a lot of cash flow forecasting tools out there, a lot of CFOs broadcasting that you need a cash flow forecast. There's a lot of bloat out there in the industry, tons of cash flow forecasting tools, tons of CFOs out there marketing that you need a cash flow forecast app. And we're here to tell you, maybe you don't.
Yeah, there's a lot of people making money off of your cash flow problems. There's also people on the accounts receivable collection side, and collection attorneys are also making money from your cash flow problems. And so I want us to get in the habit of thinking about trying to solve the underlying problem of cash rather than trying to manage it on the back end.
So this is like, I'm going to start us off with the analogy because then we can use it all throughout. This is like you're trying to fill this bucket of water and you think you need better water to put in there. So you spend a lot of money on a filtration system, very expensive filtration system. It's got 5 different filters that the water runs through and it gives crystal clear, beautiful water. You're getting the best water out of this system. And we're putting it into this bucket, same bucket we had in the beginning. And then later you find out the bucket has holes in it. So you spent all this money trying to get the best water and it's just sifting through the bottom of the bucket and the bucket's empty the whole time. This is what we're talking about. Your cash flow forecast is that water filtration system and the bucket is what we're here to fix.
Yeah, we want to fix your holes first.
Fix your holes, plug the holes. So as we go through, we'll talk about the water filtration system that we may or may not need.
Yep. Once we fix the holes and we're making, maybe we need a second bucket and we want to expand the bucket, then maybe we need a water filtration system.
Or a bigger bucket. I'd rather have more money. More if we're saying water is the money here, I would much rather have a bigger bucket than, I don't know. It depends. If I'm really thirsty, I don't really need the filtration system. Filtration system will be nice, but let's make sure we can afford it first.
Yeah, exactly. So in this episode, I'm going to make the argument that most small businesses actually don't need a forecast most of the time, a cash flow forecast. And then for those who do need it, I'll talk about the different scenarios for when you need a cash flow forecast, and then the 3 different types of forecasts that you might need, and kind of dive into how you might go about doing that. And when I talk about small businesses in this episode, I'm referring to typically businesses that are under 10 million in revenue. So, which happens to be 99% of all businesses are under 10 million in revenue. So that's most businesses out there. And most of them are pretty easily fixed by having a really, really great accounting process, building a solid cash reserve, and having a line of credit available to you that you only use in case of an emergency.
Let's start getting into what are the types of, what part are we at right now? What are the types of people that are making money off of the cash flow problem? Like that's all the different types of people that are going to be marketing to you that tell you you need a cash flow forecast. Do we want to go over those?
Sure. Yeah. So a good example would be, I was just talking to a prospect last week and he is switching accounting firms and he's like, yeah, I was at this firm. They had, this virtual CFO service offering package that I bought. And part of that was doing forecasting. And when I looked at his financials, he hadn't been profitable. He's operating a loss for the last 18 months. I'm like, did they ever tell you that maybe you should have
How much was this VCFO service?
I think it was $1,000 a month. So anyway, so what they have done, and this is very common, what's happening in our industry right now is everybody's trying to add on virtual CFO services. They're trying to add on forecasting as an upsell, trying to add on advisory, and then people are delivering it, right? You might train someone on your team to do this, but they're not thinking about, hey, maybe we should look first at your profitability and make sure that's correct before we're spending time and money trying to build a forecast. And so I just want people to be aware that not all CFOs are the same. And we really need to think about what the problem, how do we solve the underlying problem rather than trying to buy a product or a tool. And CFOs, there are, don't get me wrong, there are a lot of great, fantastic CFOs out there who do a great job. But right now in the market, everybody's calling themselves a CFO. So it's really confusing.
It's kind of we can touch on the forecasting tools too. So a lot of these tools that are being used are being marketed to accountants and other advisors as if this is something you need to be doing with your clients. So my firm has been marketed to a lot, and we're traditional accountants like we've talked about on these episodes. And one of the cash flow forecasting apps or tools marketed heavily to us told us you could be charging $5,000 a month for your clients. You could be doing advisory. All you need to do for all of them is they all need a cash flow forecast. So you could be doing this for all of your clients, and clients will love it. I'm sure there was a lot of responsible discussions around this, but I went in head first and I said, oh, this is something we have to do for all of our clients. Everybody needs a cash flow forecast. Immediately, I was planning on marketing it to everybody. I had no business doing that and diving right in to do cash flow forecasting for everybody when a lot of them don't have basic business planning aspects in place. And I mean, a lot of these are businesses that have been established, that have been in business for a long time. And this was just get your local small business a cash flow forecast because they need it. What's wrong with that, Nikole? Why, what's the problem here?
Well, I think, first of all, in order to even do a proper cash flow forecast, there are just some foundational processes that need to be put in place. So, for example, I mean, you can do a basic cash flow forecast for a small business that doesn't have a lot going on. But I always talk about this idea of once you get to $1 million in revenue, you really should be switching to accrual basis. Let me just talk us through that right now. Because in order to do a cash flow forecast, you need a profit and loss forecast. And in order to do a profit and loss forecast, you need to be on accrual basis accounting. So without getting too technical, the other thing I'll add there is you also need an accounts payable process because you need to understand what vendors you're going to end up paying and when things are due. So there's all these processes that need to be put in place foundationally before we can even start to do a cash flow forecast. The other thing is, a lot of the time, business owners aren't doing simple things like getting paid up front, using payment processors, all of the things that we talked about in our getting paid episode. A lot of times business owners aren't even profitable, so the conversation should be geared toward improving profitability because that ultimately will solve your cash flow problems. And if we have a sound cash reserve and we have good accounting processes, then we're not going to be stressed out about managing cash.
Well, we did a very good job about setting this foundation leading up to this episode. So we led everybody to the path of, now you're ready for a cash flow forecast, and we ripped the rug out from under them and said, nope, you don't need one. We built our way up to get to, okay, now we've got an AP process, and now we've got collections in place, and now we've got accrual, and we can do accrual, and we've reached the top of the mountain, and maybe we don't need a cash flow forecast. Maybe that's overkill. Maybe we've got everything in place to build a strong, healthy business with a solid foundation, and we've addressed all the core problems that are going on in that business, and now they have cash flow. To go from there to a cash flow forecast could be overkill.
Yeah, exactly. And I think like my hope is with our clients is I want to cure cancer. I don't want to just sell you drugs to help cure or help with your symptoms, right? And so like an example would be last week, again, it's like 2 in 1 week. I had a prospect who has had this bookkeeper for 10 years. And, this guy knows everything about his business. He maintains this cash flow sheet. They look at that cash flow sheet every single day. That's how they run their business. So we get access to their QuickBooks Online. I look at the last 5 years, and he's done $12 million in revenue and has cumulatively over those 12 years lost $160,000. And I'm trying to have this conversation with him about just big picture of why are you still running this business? And he's like, oh, I'm profitable. Those numbers aren't right. And really, he had never looked at his financial statements before because he was living off this cash flow sheet. And that's just like, I just want to get people to think about cash is easy for a lot of business owners to understand, but it's one piece of an overall system.
And if you don't understand what's going on the other side of that, then it's not really helping you. Obviously, this business lost money over 12 years. So it wasn't building
over
up
5 years.
something.
Yeah.
Over 5 years. Oh, okay.
Yeah.
So
I didn't look beyond that. Who knows? But so here's what happens, right? In that case, the question becomes, okay, how do you sustain a loss for 5 years? Where does that cash come from? So then I look at the balance sheet and I see a $500,000 EIDL loan. So what's happening is the business owner's looking at cash in the bank, thinking I have money, but really it's just a loan. Then the cash goes down, down, down. Or maybe the cash goes up because they get a prepayment from a customer. And then it goes down, it goes going up and down and down. They don't really know what's happening. But because there's still cash in the bank, they think that they're making money.
It all goes back to don't grow a crappy business.
Yeah.
Don't grow a business. Don't grow a bucket that has holes in it. Don't spend a bunch of money on a bucket that has holes in it because the water's just leaking out.
Yeah. And then what happens is they ultimately, all of a sudden, they do start running out of money. And then it's like, then they start paying attention to it and they go get help. And then we're in a situation where we have to turn the company around.
We want to talk about AR collection and collection attorneys.
Yeah. So this is going back to people who are making money from your cash flow problem. So there's a lot of AR collection tools out there. Obviously, you've got collection attorneys who are making money. If you're in a situation where a client doesn't pay you, you may go find an attorney to go send them a notice, and then they're taking a large percentage of that. Now, there's some industries where there's just no way to get around this. You will have to send out an invoice and wait to get paid, and you're going to have collection issues. But for a lot of businesses, technology has changed. And so there's just less and less need for AR collection. There's less and less need for forecasting because these tools allow us to collect money up front.
Mm-hmm. So it relieves a lot of the cash flow problems. We've been talking about a leaky bucket, right? Let me go use that and pivot to another analogy. I have a leaky gut. My gut is the leaky bucket. I eat food and it leaks out of my gut. Now, I wasn't told this by the traditional doctors. You and I talked about this on another episode back on our other show when I had a colonoscopy and I had doctors telling me all the things I needed to do because I had problems. I was blood a lot. And I had a lot of problems in me. And I had doctors telling me that at first I had a colonoscopy and then they told me I had to take suppositories the rest of my life. And those were expensive. The suppositories were like $2,000 a month. Insurance covered a lot of it, but whatever. Like this was my fix to all of my problems. I had to take these suppositories. That was the solution that was given to me. Then I saw a nutritionist. And a nutritionist, since I've seen that nutritionist over the past 4 months, I feel 1,000% better. I don't see blood anymore. My gut feels fine. My stomach doesn't hurt. I haven't been taking those suppositories at all, but I feel like $1 million. I feel great. I'm in the best health and shape and mentally, physically that I've ever felt. Maybe not ever, but I feel great. And that's because I saw a nutritionist. So the doctor is the healthcare industry, and they have tried to cure my problem with drugs rather than clean, healthy living, fixing the foundational problems, fixing the foods that I'm eating and the way that I'm sleeping and all of those foundational core things. So I think this translates very well to a business and being served the cash flow forecast as the drugs or the suppositories, but fixing the fit, getting your business in financial fitness and foundationally solvent is a lot of work. It takes a lot of time to get these things right. And a lot of the lessons that we've been talking about on this show are those things and that's the hard work to get your business profitable and to be in a good place. You're not going to fix that with a quick hit of this injection of virtual CFO cash flow forecast. I just wanted to make sure I clearly said that analogy without dragging on too far.
No, that was great. That was a perfect analogy.
Without getting too graphic.
So yeah, now that we've been very anti-cash flow forecast, let's talk about situations where you might actually need a cash flow forecast. So maybe you actually do have a real medical condition that is not curable. How can we help ease the pain a little bit?
Let's talk about that.
Let's talk about that.
Let's go to some examples of why you may need that drug or that cash flow forecast.
Sure. So there's actually 3 types of different cash flow forecasts that we can use for different reasons. So I'm just going to go down the 3 types and when we need them and give you some examples. So the first type would be a very short-term cash flow forecast. And so this is actually the one, we usually don't do longer term cash flow forecasts with our clients because again, we try to fix their problem on the front end. So the tool that we use with some of our clients is a 2-week cash flow forecast. And basically the purpose of this tool is for clients who are really, really tight on cash and they're in a situation where they're stressed out about not being able to cover payroll. So the way we set it up, it's a 2-week view of your daily cash balance. So we start with, okay, what are all the recurring ACH transactions that come out of your bank account over the next 2 weeks? What revenue do we think is going to be collected over the next 2 weeks? When is payroll coming out? Is it coming out this next Friday? And then really the plug is what bills we can pay and spreading that out over the next 2 weeks. And so usually we're doing this hopefully for a short term to get a company that's struggling, going through seasonality or is in distress to get through that period of time until they're in a better position. But it could be, so for example, we have an architecture firm that we do this with, and the reason they're actually quite profitable, they just bill by the hour. And they take a while, even though we've told them many times they need to speed up like getting their hours to us to do the invoicing. The owner is in a really good financial situation, so he doesn't really care that much. And so what ends up happening is like we don't get out the invoices fast enough, then the cash doesn't come in, then we have all this AR, and then they have to draw on a line of credit in order to make payroll. So the purpose of us doing this is so that we can tell them, hey, you need to draw on the line of credit this week. We don't have enough cash. And that's just, that's not ideal for our team, but like they just don't care. So we're like, we'll help you manage this problem. Another example was a retail jewelry store that we work with, and they just have a lot of seasonality, right? They're like during Christmas and stuff, they have a ton of sales, ton of cash. Other parts of the year, it's less cash. So it's more of a bill pay tool to decide what vendors they can pay to make sure that we're not missing payroll when payroll comes up.
And so for different situations, different reasons, one being the case seasonality, the other one a mindset that they just don't necessarily care. They're okay
Yeah.
with going under for a little while, but that's where you needed different tools to help those situations. And that's where a line of credit or something that's a valid reason. These EIDL loans were just handed out. Basically, no check on the business's health or financials, very little due diligence. and businesses were just getting loans. So we're in a unique situation here where that was unprecedented, where this many loans were just handed out to artificially prop up businesses that are losing money. So what you're seeing in the market right now is the result of that, where you have a lot of people that are still in business. That's going to those bubbles are going to pop. I mean, they maybe already are. If, that's been the case 5 years and lost almost $200,000, that business may not be in business that much longer once those loans run out.
Right. Yeah. And what happens is, so then now these businesses are looking for, now I'm going to go out and try to get more cash. Where can I get more cash? And then you get yourself in a situation where you've got predatory loans or you're factoring. And then you get these interest rates are so high on these things that it's so hard to come out of it once you get in that situation.
So the sad thing is we're going to start seeing a lot of people claim bankruptcy too. Then, because how else will these businesses that may have been well-intended, they may have been great businesses to start out with, but somewhere along the line, too much money got flushed in and they started making poor decisions because they had a lot of cash on their hands. Or maybe they needed the loan for other reasons. And then the EIDL came out, perfect timing for them to just grab this cash because they were already struggling. The business was already failing. And now you have a business that may have went out of business back in 2020 is now still operational.
Well, I think that the EIDL loans were actually one of the worst things that could have happened for small businesses, because typically when you go get a loan, you have to go through due diligence, which means that the banker is going to look at your financials, and nobody's going to just hand you over money without making sure that you have a financially fit business. With the EIDL loans, there was no due diligence. And so you have these businesses out there that really shouldn't be in business, or they would have gone and corrected their financial situation through that process. They would have went to go get a loan. The banker would have advised
them. It would have forced them to face the truth. It would have forced them to actually look at themselves in the mirror.
Right. And a lot of our value as accountants is we can help a business that needs a loan get a loan by putting together a set of proper financial statements. And so a bank wouldn't have just handed over a $500,000 to a business owner. And so now business owners have they're in all of this debt, and they put more money into marketing and growing this thing that's not profitable. And now they've got this huge loan on the books that they have to pay back, and they're just now facing the reality of it. And that's the really crappy part about this.
So what are some, I guess we're not going to fix this problem. We're not going to fill this bucket, but we can serve to try to heal the gut. We can try to heal the problem and build a better foundation and try to plug those holes so it's not leaking anymore. So the bucket and the gut is no longer leaking. That's all we can do now at this stage. Some of these businesses may just go under. We may need a whole new bucket. we may need to trash this one. There's no fixing this.
Yeah. Yeah.
Gut, I don't think you can just get a whole new gut. That's not.
So the next type of cash flow forecast is probably going to end up being what some of these businesses that got a bunch of debt and now they're finding themselves in financial distress are going to need. So this is called a 13-week rolling forecast, and it's called rolling because you're always rolling it forward and looking 13 weeks forward. So basically looking at a quarter on a rolling basis into the future. And typically companies that are in distressed situations, or companies that have a lot of debt service, because think about it, if we are paying back a loan, that does not show up on your profit and loss statement. So you've got a lot of things happening on your balance sheet. And you also may be presenting this to bankers or investors to show them hey, we're in a cash flow crunch right now, but over the next 3 months, we're doing XYZ. And this is what our business is going to, as you can see, we're going to get out of this in the next 2 months. And other businesses might need it on an ongoing basis if they have seasonality or they have long cash flow cycles, meaning that maybe they don't get paid for 2 or 3 months for whatever reason because of their business model. So there are some situations where you need this 13-week rolling forecast ongoing. A lot of times it really should just be temporary in a situation where you're distressed. So a lot of CFOs that come in and do turnaround work, turnaround meaning that is somebody that does turnaround work is a type of person that you hire to come in and save you from going bankrupt. And so one of the first things they'll do is they'll put this 13-week cash flow forecast together for you.
Yeah.
But again, most businesses don't need that.
Most businesses don't need it. So if you're in, and this is where we're trying to catch people before they get into that stage. If you just get the sniff or the whiff of cash flow problems, come find us. We're the cash flow doctors. I bet you somebody else already calls themselves that.
That's a good one.
We're the cash flow nutritionists. That's what we are. We're the nutritionists. We're going to help you fix the core problems.
Okay. So, and then they'll get into the third one here. So typically the longer our cash flow forecast extends, the less accurate it is. So typically we don't really want to go beyond that 13 weeks. But there are certain situations where you may go beyond the 3 weeks, where you may do like a monthly for the next 12 months. So a situation where you might do that would be if you're going to expand into a different location or buy a big piece of equipment or multiple pieces of equipment or buy a bunch of inventory, and you want to know over the course of the year or however long it makes sense to look out, what does that do for cash? Like I'm going to open another office. So that means for the next year, our partners may be getting less distribution. That means we may get a loan and then we have to finance and you'll pay back some of that loan. So basically you're making a decision now and you're trying to understand what does that do to the long-term cash for the business, and then how does that impact you personally as the owner? That's a situation where you might do a longer term cash flow forecast. And again, that's more like a project one time. Okay, we did it. Now we know it's a good investment. Let's go ahead and move forward with it. So it helps you make a decision.
Yeah, it's like a triage, or like going into the ER or needing something for a temporary period of time until you're better.
Yeah, exactly. Bringing it back to the medical field. I like it.
So long term, how is all this impacting the business? We've taken the business to the stage where now we know they should only get that drug or that instance of fix when it's utterly necessary, when it's one of those stages where the business is almost, looking to close its doors, or other situations like you just mentioned. But long term, once the business is financially fit and things are going well, and this is a business that doesn't have seasonality, this is a business that's just kind of rolling along. Let's assume this is some kind of professional service business that is on subscriptions, that's charging people up front, that doesn't necessarily have any cash flow issues, so to speak. Are they ever going to really need a cash flow forecast?
So they might need a profit and loss forecast, or I would say like one thing I don't do a cash flow forecast for myself, but I always like to do a business plan at the beginning of the year to kind of set my intentions for the year. And that's usually I'm looking at on my profit and loss statement, and I'm using that to make hiring decisions. So I know if my revenue gets to a certain point, that means that, maybe that's May that I'm going to need to think about hiring if I grow at the rate that I think I'm going to grow. Obviously, that may change throughout the year as time goes on. But the other thing I'll do if we're thinking about hiring somebody, I'll go in and I'll put them in on when I think I'm going to hire them so I can see what that does to my profitability. But the thing about professional service firms is if you're doing all of these things correctly, your cash flow will closely mirror your profitability. So the difference, there's not this big timing difference. Like if you're not getting paid for 2 months on invoices, then you've got a timing difference and you've got to manage that timing difference. So if we can eliminate the timing difference and better align your cash inflow with your revenue, then we're not trying to do this balancing act all the time.
Yeah, for sure. For sure.
So the other situation, maybe there might be a time something would happen with a professional service firm could be that you have a revenue dip for a while. Maybe you lose a big client that's like 25% of your revenue. And so you're faced with this decision of, do I lay people off that I've spent the last 2-3 years training? They're like really, really valuable people. Or do I keep them on and sustain losses for a few months, knowing that I can go out and hustle and bring in some more business to cover those people. So you have to make a decision. And that would be a case where you might do a cash flow forecast and say, how much am I willing to lose? How much am I willing to, is it $30,000? Is it $40,000 that I'm willing to take a loss on out of my own pocket to keep these people? Because that's more important to me than letting them go and then having to go hire new people in 3 months when we get back up to normal revenue levels.
Yeah. And that's something that you and I have had to deal with at our firms we've gone through situations like that. And that's professional services. Your main cost is your people. And so anytime that you're dealing with turnover or capacity constraints or issues, that's when your cash may feel tighter too. Or if you have an abundance of cash flow, that's when we use the cash flow forecast, is when we need to hire and we have a lot of cash, but little capacity. So we need more capacity means less cash. Typically margins are going to run tighter when you're over capacity. And that's typically when the only time we'll ever really use or take a look at the forecast is how salaries, payroll, when you adjust salaries, give people bonuses or raises, we tend to look at it in those times as well.
Yeah. And there's simple ways to do that too. Like I know, like I have a certain goal of revenue per direct employee. So I know if I'm approaching that number, it's time to hire. So I don't necessarily need to do a forecast in that situation. I just have like simple ways of monitoring my business. So if you can find those simple KPIs and use that at a minimum, right, that can go a long way.
Long way, yeah. So is that our stance on cash flow? I had another comment to make, another thing related to the cash flow forecast being a drug. I recently was on LinkedIn and I saw their tagline was, "I am addicted to cash flow forecasting." That's what it said underneath their name. So it's an addiction. It could potentially be an addiction. And this is another thing that goes into that drug analogy of it being the drug. It's the painkiller. And when you take that painkiller when you needed it after that operation and your appendix burst and now you needed the painkiller temporarily, it's an addiction. It's a narcotic, and eventually it sets in, and now you're getting painkillers because you hurt your back or you twisted your ankle or this or that. So every little thing that comes up, now I need a new cash flow forecast. Now I need a new VCFO. And so maybe that's the addiction that creeps in and people think they need it.
Yeah, I was also talking to a prospect yesterday. The owner, so it's a property management company. And so they've run into cash flow fiduciary issues because they're collecting money from, let's think about when you go to an Airbnb or like book an Airbnb, right? You may book it today in March and then you have to pay half of it now. And then maybe you pay the half when you actually show up. And then they're collecting that money and then they're paying it. The property management company has to collect it and then pay it to the individual that they're doing the property management for. Well, if you do a cash flow forecast or you're doing a cash flow sheet, right? Your cash may look really good because you've got money coming in the door, but you actually owe that to somebody. So someone could say, well, we could do a cash flow forecast for you to see when you owe that money. Or what we could do is we could take all that money that you owe, put it in a different bank account so you don't spend it. Spend it. Yeah. And have a liability. There's all things you can do on the accounting side to manage that better rather than trying to let me do the cash flow forecast isn't always the answer. Good accounting processes,
good systems, good processes, good accounting foundationally, getting a relay account and setting aside accounts for those reserved expenses, things that are spoken for. So you're not spending money that somebody else, it's like the trust accounts with payroll for certain payroll providers that don't collect the payroll taxes. And then the taxes come due at the end of the month and you've already spent that money. You withheld it from your employees and then you can't. Those are the situations where people really need some discipline.
Yeah,
you need good systems in place.
You mentioned Relay. That's a good bank account. We like that one. It's online. And so if you want to spin up a new bank account, it's really easy to do that online rather than having to go into a bank. And then, so in that situation, right, you move the money into the other bank account. And then when you actually complete the paying out the customer, recognizing the revenue, then you just move everything into your operating account. Now it's your money. You can go spend that money, but don't touch the money that you owe to your customer.
Well, cool. Any other points to make on the cash flow?
I think we nailed it all. Hopefully the CFOs out there don't hate us, and maybe we'll have to have one come on and argue that
I think
point.
we might have to have a debate on the necessity of a cash flow forecast, because we think if your business financials are sound and you have a good foundation set in place, you're working with a good accountant, you may not need a cash flow forecast. It's overkill unless your business is over 10 million. And in that case, there's a lot of other things you need too, along with that cash flow forecast.
You got it.
Thanks, Nix.
All right.
Appreciate it. Scott. Thanks for listening, homies. Peace out.
Okay, bye.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like you're running nowhere fast. You work hard, but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports, but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cashflow Show. This is the Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cashflow Show. The Cashflow Show, where we help the small business gain momentum and become profitable. This is the Cashflow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cashflow Show. Our advice will take you far. With Nikole and OKR.